Hello everyone, and today we would be discussing a disclosure standard that is on AS17, which is on segment reporting. Now, this is a standard which is applicable for companies which are preparing a segment report and who are disclosing a segment report in the notes to accounts. Remember, segment report is to be disclosed in the notes to accounts. It is not a part of your core financial statements like your balance sheet, your P&L, your cash flow statement. These are a part of your core financial statements, and then in notes to accounts there is a segment report among other things as well. So generally, for our understanding, segment reports should be prepared by non-SMCs. These are the big companies or level 1 category entities. In general, if you remember, introduction of accounting standards. So let us assume a segment report has to be prepared. Then what is the constituent of segment report? And firstly, how do I segregate or differentiate between various segments? So the first part of the standard is a bit of theory, less important. There's quite a bit of subjectivity over here. The most important part is the identification of reportable segments in my understanding. So when we look at, let us say, when we look at segments, segments are identified as those components which have different rewards and different returns as compared to other segments. So over here, if I am, let us say, Tata Motors, then Tata Motors manufactures cars. Well, it also manufactures trucks. Now, cars, there may be various models like the Tata Harrier, Tata Nexon, etc. Trucks also, there may be various models. Now, it is not necessary that I show all of these models as different segments. However, cars as a group have a distinct risk and a distinct reward. Like, cars can easily get replaced if there's a lot of metros and public transport as opposed to trucks. Whereas trucks have a distinct reward and risk. Like, for example, if the country's capex cycle, there's a lot of industrial production happening, I need a lot of trucks. So the risk and returns of these groups are quite different, and hence I can categorize them as two separate segments. Now, this is separate segments considering separate businesses. However, it is very much possible that you can even have operations across different geographies. Like, for example, Tata might sell its products in Asia, India, let us say, then in Europe, then in Africa, then in America. Again, these different geographies also have different rewards and different risks. Like, the risk and reward of operating in the Middle East, for example, is very different from the risk and reward, let us say, of operating in Africa, is very different from what is there in North America. And hence, if geographies have a different reward and risk, well, they can be shown as different segments as well. And remember, within geographies, you can very well have different geographies within a country as well. Like, a lot of FMCG companies have rural India and urban India as different purchasing pattern. Maybe internationally there's not as much inequality in distribution as it is in India. So maybe if the consumption pattern, etc., is very different in rural and urban, well, they can also be different geographic segments even if they are within India. So basically, for you to identify different segments, which is subjective, case based, fact based, and you can't put a law over here, they should have different rewards and risks. Various indicators can be looked at that, like the nature of products should be different. Like, cars and trucks are different products. The production process can be different. Like, for example, when you look at even within cars, electrical vehicles and petrol vehicles might have a different production process, different segments. The customers may be different. Like, customers of a truck and customers of a car are quite different. The method of distribution might be different. For example, like when you look at a media house like a Star, they might distribute content in the form of Star TV, or they might distribute it as Hotstar. The medium of distribution or regulator, if applicable, should be different. Now, it is not necessary that each of these 5 conditions have to be different. You can say that if majority of these conditions are different, we can say that they are separate, having separate risk and reward. So this is regarding segment reporting, and within segment reports you can have a business segment or you can have a geographic segment. But what if you are having multiple businesses and multiple geographies, in which case you will have to identify one of the two as primary segment and the other will become a secondary segment. For a primary segment, you will give a much more detailed disclosure. For a secondary segment, you will give a much more summarized disclosure. So how do you figure out whether it's a primary segment? Again, it depends on the company's assessment of what is more important. Like, if a management is reviewing business performance quarterly, monthly, whereas geographic performance once every year, then business seems to be more important. Or if the organizational hierarchy is made in such a way that at the top there are business heads and below there are geography heads, in which case business is more important. But what if both of them are equally strong, or the question remains silent? Then AS17 tells you that if you are unable to decide between the two, which is primary and secondary, business is assumed to be primary, geography is assumed to be secondary, and in a primary segment you will give a much more detailed disclosure, in a secondary segment you will give a much more compact summarized disclosure. So this is regarding identification of segments and primary and secondary. In my opinion, this is a little subjective and relatively less important from an exam perspective. The most important part, in my opinion, is the identification of reportable segments. Now, what is a reportable segment? These are segments which will make it up to the segment report. We said that every segment which has a different risk and reward is a different segment. That's right. However, what if these segments are not material? Like the Tata Group has various businesses. One of them may be manufacturing and selling cycles. Now, these bicycles, Hero has a very big business of bicycles, but Tata, you will hardly see Tata bicycles. Now, as compared to the entire company, it might have various such small businesses. Well, if they are not big enough, they are not material enough, they should not be separately reported. Why? Because a reader has to be given data which is relevant, which can impact. If you give them a lot of data in one A4 size paper, the reader will get confused, and hence I want to give only the important segments and club everything else in the others category. Now, how do I figure out whether a particular segment is important? Listen to this very carefully. This is the most important part. The standard has given certain quantitative thresholds. That is, they have given you a quantity, and if your financial parameter crosses that quantity, then you are a bigger segment. So there are three important financial metrics. First is revenue, second is profits, third is assets. Now there can be other items as well, but AS17 has told you that you look at the segment revenue, and if your segment's revenue is greater than or equal to 10%, that is the threshold of the total segment revenue, you are a big segment. Or you look at your segment assets. If they are greater than or equal to 10% of the total segment assets, you are a big segment. Or loosely speaking, if your profitability is greater than or equal to 10% of the overall profitability, you are a big segment. Do I need to satisfy all the three? No, sir. I need to satisfy any one of them. Even if any one of them is satisfied, I am a big enough segment. So over here, when I look at quantitative thresholds for segment reporting, a segment which has a segment revenue of greater than or equal to 10% of the total segment revenue. Now, what are the nitty-gritties, fine points over here? First of all, when you calculate segment revenue, it will include external as well as inter-segment revenue. Like there may be divisions which are manufacturing a lot of products, but they are transferring it in-house only, and hence the standard says here in my P&L I will show only the external revenue as per AS9. However, if I have to figure out whether a segment is big or not, it might happen that 90% of my products I'm giving in-house, 10% I'm selling in the market. It might appear I'm a small segment. No, like I'm a mining division giving 90% of the iron ore that I extract to the steel refinery, 10% I'm giving out in the market. However, my total size is correctly gauged by looking at the total of external and inter-segment sales. My external sales will be measured as per AS9, but for internal sales there is no separate standard, and hence the standard says that you can apply whatever is the internal pricing policy of the company. It can be at cost, at market price, above cost, above market price, below market price, as long as you disclose it, what is the inter-segment pricing, and apply it consistently. So the first thing you have to remember is the segment revenue is greater than or equal to 10% of total segment revenue, which is external and internal both. Second problem comes in profitability. When you look at revenue, revenue will always be positive or zero. Assets, again total assets will be positive or zero. However, profits may be positive or negative, and as a result there might be situations where you might come up with a situation where there will be a positive bias. Like for example, you will have 10 rupees of division A, 100 rupees for division B, minus 5 for division C, minus 95 for division D, and hence if I total all of this, it probably comes to let's say, what do I say, this comes to, let's say, around, I think, 10 rupees. 10 rupees into 10% comes to 1 rupee, and hence any segment which has a profitability greater than positive 1 should be reportable. So segment A will be reported, segment B will be reported, but then C and D have profitability which is lower than positive 1, hence they will not be reported. But that is wrong. I am interested in knowing that segments which burn my money, that is like D, as well as segments which make me money, that is like B, and hence the standard says that you will calculate the size as segment profit or loss ignoring the sign, which is the threshold will be calculated as 10% of the higher of the total segment profits. Again, total segment profits are 110, 10 plus 100, or total segment losses, that is 5 plus 95, that is 100. So, higher of the two is 110, and hence your threshold will be 10% of 110, that is 11 rupees. So, whichever segment has a profit or a loss, that is, you ignore the sign, whichever segment has a profit or a loss as a case maybe, which is greater than 11, will be reportable. So, A over here will not be reportable. No. B will be reportable because it has a profit. C will not be reportable because it has a loss, but it is less than 5, so it's a small loss. And D will now be reportable. Why? So segments B and D will be reportable. These are my important segments, and everything else will show in others. This 10% of the higher of total segment profit and loss arises only in case of segment profit gains, because for everything else, assets as well as revenue, everything is going to be positive. This can be positive or even negative as a case may be. And last is segment assets has to be greater than or equal to 10% of the total segment assets. So these are the three quantitative thresholds. If you trigger any one of them, like for example, you might be a company which has high revenue, first criteria might be met, or you might be like a CFM or a doctor which has maybe relatively lower revenue but higher profit margin. The second clause may be triggered, or you might be an infrastructure division where you are generating very limited revenue or profitability now, but you have invested in a lot of assets. The third clause may be triggered. Basically, any one of them is triggered, and you will say that your segment is reportable. Here you don't have a choice, you will have to show these segments if they are big in size. Next, there are some additional criteria, that is, there may be a case where a management wants to show some segment even if it does not meet the 10% threshold for each of the criteria. Like Tata has started, let's say Tata New. Now that is an e-commerce venture. Tata wants to show its readers that it is trying to move in the direction where the overall trend is moving, but it is currently small, but I still want to show it. Well, then management choice. If the management decides that it wants to show a segment voluntary, it can very well show it. And then the last, and in my opinion it's a hidden adjustment, it's a very important, this is a big picture test. What is a big picture test? Your selected segments should cover at least 75% of the external revenue. So if you have selected segment B and D, that segment B and D should cover at least 75% of the external revenue, not the segment revenue in the P&L account. Because for a reader to make a decision looking at the segment report, that segment report has to be conclusive, it has to be exhaustive. Now if your segment is covering only 5, 10, 15, 20% and everything else is shown in others, that segment report is not as meaningful. And hence, if there will be a hidden adjustment, that at the end of every question, if required, you will see that whether your selected segment, that is B and D's external revenue, covers 75% of the total external revenue. So, sir, what if it does not? Then you will keep on adding segments arbitrarily, randomly, whichever you want. Generally, we'll pick up the higher revenue ones first, in such a way that 75% is crossed. So this is total external revenue should be greater than or equal to 75% of the total revenue. So these are the criteria. Now one more thing you need to remember is everything over here is based on segment revenue, segment profit, segment assets. Now what is segment revenue or segment profit or segment assets? These are only operating items. There may be certain non-operating items, like I may be audit department and tax department. Now audit department, when it generates stat audit fees, internal audit fees, that is very much operating income. However, when that audit department, let us say they randomly applied for a lottery, they won lottery, that is not linked to audit operations, and hence you will not show this as a part of segment revenue. Or audit department generated some income, they deposited in bonds or in equity shares, and they earn investment income. Now this is linked to investment and not linked to operations, and hence this will not be a part of my segment revenue. Same logic even applies for segment expenses, segment profit, as well as segment assets. Like you might have segment assets like a PP, like an inventory, like a debtors. These are linked to operations. However, if you have investments are investing in nature, they are not linked to operations. And as a result, if there is a segment asset which includes investment, or why just investment, it might even have tax assets like a current tax, deferred tax. Remember, operating profit, EBIT, is before interest and tax. So tax is also treated as non-operating over here. So these will not be taken as a part of segment assets. So all the segment numbers, whether it is segment revenue, segment expenses, segment profit, or segment assets, even segment liabilities for that matter, if you had to see later, like loans taken are financing in nature, they are not operating in nature, but creditors, outstanding expenses are operating in nature, and hence the word segment revenue, income, expense, whatever, only includes operating items. Non-operating items will not be a part of the segment revenue calculation. Okay, so this is regarding operating and allocable items. This is second point, mentions that if there's any internal transfer, then you will have to just disclose the prices, and you can take your internal transfer price. The next part involves presentation, and that is preparation of the segment report. Now, as we said, segment report has to be prepared in notes. While preparing it, there will be primary as well as secondary segments. Within primary segments, there are 6 important headings. First, to the extent data is available, segment revenue. Here you have to give the breakup of external versus inter-segment revenue, and then you will show the total segment revenue, and then show even elimination of inter-segment, because in my P&L I will only have external, but I will show the breakup between external and inter-segment revenue. Second, segment profits. Now I don't have to show line by line every expense like I prepare in my schedule 3 for P&L. I can directly show the segment result. So segment result is a segment revenue minus segment expenses, and that segment revenue is calculated as allocable segment revenue minus allocable segment expenses, and that will give you your final answer. as segment result or segment profit. Now the problem over here is you might be a very savvy investor because you are a chartered accountant. Most of the people are not as savvy, and hence when they look at the total segment revenue or total segment profit and they compare it with the statement of profit and loss account, and if the numbers don't tally, they get confused that what is this, what is this, and hence the standard says you have to show a reconciliation like you do BRS, where you try to reconcile the passbook balance with the balance in your books. In a similar way, you will try to reconcile the total of the segment profits result with the net profit appearing in the P&L. Like for example, when you look at what do you say, what are the reasons for differences? First, unallocable items, like an MD's salary. MD is devoting time to every division, and hence it may be difficult to allocate MD's salary to a particular division. Or there may be a bus for your employees of audit, tax, everyone who drops from your office to the station and vice versa, in which case that is used by every employee, and hence you may not be able to allocate it. So the difference may be due to unallocable items, or there may be a head office which you are unable to allocate, or there may be non-operating items like this lottery, like this interest income or interest expense or tax items. So these are the reasons why there may be a difference between the total of segment profit with the profit appearing in P&L. So you'll have to show a reconciliation. Point 2. Point 3 is now you are going on the balance sheet side, segment assets. This is operating assets which can be allocated division wise. Again, reconcile with total assets. There may be some unallocable items. With this bus you cannot allocate it division wise, or there may be non-operating items like you have made investments, or there are some tax assets, current tax, deferred tax. You will study deferred tax in AS 22, or TDS, etc. All of these are not linked to operations, so you will have to reconcile with the total assets appearing in balance sheet. Same is segment liabilities, point number 4, with the reconciliation with total liabilities in the balance sheet. These are the 4 core balance sheet and P&L items: segment revenue, segment profits with the reconciliation, segment assets with the reconciliation, segment liabilities with the reconciliation. Then there are 2 additional items to the extent data is available, that is depreciation division wise and capital expenditure. Capital expenditure is the amount that you have invested in fixed assets during the year. Now why do I need to show that? Generally so that I can understand how much investment is the company making in each division, how much fixed assets are they investing, and compare it with depreciation on whether this investment is just similar to depreciation, that is maintenance, or are you investing much more, in which case you are expanding a particular division. So this will give you good insight. So 6 items I'll quickly repeat: segment revenue, that is along with breakup of external and internal; segment profit with the reconciliation with the net profit; segment assets with the reconciliation with total assets; segment liabilities with the reconciliation with total liabilities; and capital expenditure as well as depreciation to be shown separately. This is to be shown for a primary segment report. This is a fairly detailed report. However, if I'm operating in multiple businesses in multiple geographies, I'll also have to prepare a secondary segment report. Over here the institute is a little liberal. Instead of taking these 6 items, it will pick up 1 item from the P&L, 1 item from the balance sheets, and 1 item from capex or depreciation to the extent of data available. It says you show only external revenue. Let us say secondary, that is geography wise, okay, only external revenue. No need to show internal, no need to show segment profit as well. Remember, profit calculation is a headache. You have to allocate every item division wise. So we say, okay, you have done the allocation for business, it is fine, you don't need to do it for geography. So you show external sales. Second, between assets and liabilities, I think assets are more important, so I show assets, segment assets. Third, between capex and depreciation, capital expenditure is more important. So these are the 3 items I will show in case data is available to that extent. Okay. Next, you have a few key points. First, what if you are a coaching institute like me, where I am operating in one business, that is coaching, in one geography, that is India, and hence I don't need to prepare a separate segment report. But how will the reader know that? I'll have to give a note. If I am operating in a single business in a single geography, I don't need to prepare the segment report because there are no segments. I'll tell that via a note to my reader. And secondly, this is one of the very few places where you have a situation like this. Usually when you will study consolidation, there is a separate or standalone financial statements, and then there is consolidated financial statements. In your annual report, you have to give both standalone panel sheets, standalone P&L, consolidated balance sheet, consolidated P&L, cash flow, everything. However, for segment report, the standard has given you a relaxation. That is, if you prepare the consolidated segment report, you are exempted from preparing the standalone segment report. If you want to prepare, you can still prepare, but it is not mandatory. So over here, that is another key point that you should be aware of. Next, we will go to the questions on this. There are a few questions on LDR. We will review that, but otherwise, we'll quickly discuss every question that is there in the mat and get done with this. So, first question I would say is important. Similar questions to this have even come in the exam. Let us quickly review this. The chief accountant of sports gives the following data regarding the 6 segments. So, you have the data regarding 6 segments and a total balance also given. The chief accountant is of the opinion that only M and N should be reported. Is he justified in his view? Okay, so how will I do that? I'll first look at the threshold for revenue. So over here, this is 1200 into 10%. If I go to see, this is going to be 120. So segments which have a revenue of greater than 120 or even equal to, that is M and N, should be reportable. So based on segment revenue, M and N would be reportable. Then you look at, let's say, assets. For simplicity, I will take 10% of 200, that is 20, and hence if anything has greater than 20, this is 40, 80, 30, even equal to is fine, P and Q. So basically, based on the assets criteria, M, N, O, P, Q will become reportable. And then you look at segment results. So when we look at segment results, I'll take the total profit 50, 10, 10 and 30. So this is equal to total profits, I think, of if I'm not wrong, 100. And if I take total losses, 190 and 10, that gives you 200. So higher of the two is 200. 10% of that will come to, let's say, 20. So my threshold over here is 20. And when I take 20, M is reportable, and even if there's a loss is reportable, and then R is reportable. So basically M, N and R. So basically, if I, so do I have to meet all the criteria? Chief accountant says M and N. Maybe he's thinking that all the conditions have to be met. The answer is no, only one of them has to be met. And considering that all segments, M, N, O, P, Q and even R, which was covered in segment results, will be reportable. If all segments are covered, 100% of the external revenue will be covered, and hence I don't need to check for that 75% as separately. So this is question number 1. Now we will go to, we'll go to similar questions first. Just wrap that up. 10, 11, 12 are similar to that. So we'll just wrap that up quickly. 10 and 11 are similar to past exam questions that have also come. 1 is also similar to past exam questions. So in 10 and 11, you're just focusing on segment result. The second, which is the most complex test. XYZ has 5 business segments. Okay, P&L of the segments for the year ended 31st March 12 have been provided. You are required to identify from the following whether the reportable segments are reportable or not based on the profitability test. So based on the profitability test, you will take the total profit, which is 225 plus 25, which comes to 250, and total losses, which is 175 plus 20 plus 105, which is probably equal to 300. So we'll select higher of the two, which is 300, and hence the threshold is 10% of 300, which is equal to 30 rupees. And hence anything greater than 30, that is division A, is reportable, B is not, C is reportable, D is not, E is also reportable. So segments A, C and E are reportable segments. You don't have data for the external revenue check, and hence these are your reportable segments. Now question number 11 is on similar lines. If I do question number 10, 11 is automatically done. So you have 5 segments A, B, C, D, E, and you have been given this data. So again, you will take the total profit 780 plus 1500 plus 600. So your total profit is 8280. You will take the total losses, which is around 6800, and hence you will select higher of the two, which is 8280 into 10%, and this will come to 828. Okay, so if I take this as 828, what are reportable? Well, what is reportable is division A is not, B is, C is, D, even if it is loss making, it is a loss more than 828, and so is E. So basically, if you see at the end, D, C, D, E are the reportable segments. Then is question number 12. Now in question number 12, you have 6 segments from L to Q, and you have been given total revenues. This is the only question where external and internal both are given. Profits and losses and assets are set out below. I will definitely mark this for your last day revision, because I have this profits, external, internal, everything covered over here. So if I look at inter segment and external sales together over here, this is I think 16,500. This is 3,500, and so this is probably I think 11,250. Then I have 4,500. Then I have 5250. I am finding the total segment sales 6,000, and I think 2250. So if I now were to total all of these, this is I think 10,400 plus 35,350 comes to around 45,470 into 10%. My threshold over here is 4575. So this is 750. I think 45,750. So my threshold will be 4575. So everything above 4575 will be reportable. So over here, L, M, it is greater than 4575. Okay, N is not, because it is just below 4575. O is, P is also, and Q is not. So basically on the revenue side, I will say L, M, O, P are reportable. Then you come to the profitability, which is again the same Gizabita adjustment, where I will take the total profits. This is 3000 plus 1500, that is 4500, and plus another 900. So this is 3500, 4500 plus 900 plus 600, it comes to around 6000. So I will take 6000, or I will take 2250. This is the total of the losses, whichever is higher, that is 6000, and the threshold will be 600. If I keep 600, what will be reportable? Well, L, M, even N and O, because they are having a number greater than 600 in absolute terms, and even last one because exact 600 is also covered. So basically the third one is now a formality, because now under the profit L, M, N, O, P, Q, all segments are reportable. Now irrespective of what happens with segment assets, all segments are reportable. But for academic completion, if I were to complete, the threshold over here will be 10,275, and based on that, L, M, N, even O and even P. Q is not reportable. Other than that, L, M, N, O, P are reportable. Basically, considering this, all segments are reportable segments, and hence 100% of the revenue is kind of covered. So if you can see over here, all the segments are reportable. Perfect. So that is question number 12. Now there are a few other case-based questions. We'll quickly review them. I would not really put a lot of weight from an exam perspective. The exam questions, if you see, are largely coming on the reportable segment side. So let us quickly review this. Question number 2. A company has an inter-segment transfer pricing policy of charging cost less 10%. Okay. The market prices are generally 25% above cost. Is a policy adopted by the company correct? Yes, no problem in that, as long as you disclose this policy and apply this consistently. You can very well follow. So you can have adopted by the company is correct if it needs to be disclosed and applied consistently. That's about it. Now question number 3 is on the concept of segment assets. Segment assets is the total assets minus non-operating assets, if any. So XYZ has 3 segments, X, Y and Z. The total assets are 10 crores. A has, so X over here has 2. This is total assets. Y over here has 3 and Z over here has 5. Okay. Deferred tax assets. It can be deferred tax or current tax, but basically a tax asset. Deferred tax asset, it is non-operating, it is linked to tax. Included in each of the segments are 0.5. So this is less 0.5. For Y is 0.4, less 0.4, and for Z is 0.3. Why am I subtracting? Because I want to find the segment assets, and segment assets is after removing the non-operating assets. Okay. The accountant contends that all the 3 segments are reportable. Well, how will I say that? Well, I will look at 1.5, that is a segment asset, 2.6 and 4.7. The total of this is 8.8. 10% of that comes to 0.88. Now this 0.88, X, Y and Z all are having segment assets of greater than 0.88, and hence the contention of the accountant is correct, but not by comparing total assets, but by comparing segment assets. So over here I'll compare these numbers and then figure out that the contention is correct. Now question number 4 we'll keep at the end. This is preparation of the segment report. We'll just complete all the small theory cases first. Go to question number 5. It is a subjective question over here. Microtech produces batteries for scooters, cars, trucks. Okay, this is automotive batteries, and it also provides specialized batteries for inverters and UPS. This is usually for power backup in places where power kind of trips. You want power backup, so you are making these batteries. How many segments do you think it has? Now this is highly subjective, so I don't really see a question like this popping up in your exam, because we are not battery experts. But if it comes, what has the institute said? Institute has believed that the risk and reward attributable to car batteries are different as compared to risk and reward of inverter and UPS. Like the car batteries, depending on road condition, heat, etc. in general, whether it is car, trucks or bikes, whereas inverter UPS depends on how well the power grid is connected in your particular region. If power connectivity is poor, then people will need more inverters and UPS. So over here, institute has said that there will be 2 segments, automotive and specialized, but again there can be an alternative treatment depending on the facts of the case, because we are not battery experts. Second, we have question number 6. This is similar to question 2 only. Company has an inter-segment pricing policy of cost less 5%. Market prices are at 20% above cost. Is this policy correct? Well, no problem. You can follow that as long as you are applying it consistently and you are disclosing it. Question number 7. Company A is engaged in manufacture of chemicals. Now, this is highly open-ended. The company manufactures 5 types of chemicals that have different applications. That's fine. Can this company include more than one type of chemical in a single business segment? Well, it depends. Depends on what? Whether these chemicals have different risks and returns. If they have different risks and returns, then you will show them as separate segments. But if they have similar risks and returns, you can club them into a single segment. Now, how will we know that? You will look at these 5 criteria that we had discussed earlier. You look at the nature of the chemicals, that is the products, nature of the production process, type and class of the customers, like we had discussed about truck drivers versus car drivers, and methods to distribute, like OTT versus your usual TV, and if applicable, the regulatory environment. So basically over here there is a lot of literature that the institute has given in its RTP, but you will generally, you can club the chemicals if you believe that these chemicals, even if they have different applications, if these chemicals are majorly common on these 5 factors, but if they are majorly different on these 5 factors, then you cannot club it, you will have to show it separately. The question is, the solution has also left it open-ended. So they have said chemicals having different applications can be included if majority of the relevant factors are similar, but if they are different, you will have to show them separately. So this is a theory based thing, just in case it crops up, you should be aware. Question number 8. Company is engaged in the manufacture and sale of products which constitute 2 distinct business segments. Okay, clearly it is told that there are 2 distinct business segments, like you are selling tractors and then let us say you are selling something else like software products. The products of the company are sold in the domestic market only. The management information systems is organized to reflect operating information by 2 broad market segments, that is rural and urban. Now the problem is, this is geography. Now when I look at products, that is tractors and software products, I will say that this is clearly 2 different business segments, but are there 2 geographic segments as well? Besides the 2 business segments, how should A identify geographical segments? Again, I will look at primarily whether the risk and return are different or same. If they are predominantly different, then rural and urban can be shown separate. Like for consumer companies, a lot of times rural and urban demand is very different, and hence you can show them separately. But if they are by and large similar, then there is no point segmenting. Do geographical segments exist within the same country? Well, yes, why not? If the risk and return conditions are different, you can very well have it even within the same country. The law nowhere tells you that a different country is a different geographic segment. Explain in line with AS17. Again, you see a lot of literature given. A single geographic segment does not include operations in economic environments which are having significantly differing risks and returns. So if rural and urban have significantly differing risks and returns, then you can very well treat them as separate segments. Accordingly, geographical segments A need to evaluate whether the MIS, they are able to subjectively different risk irrespective of whether they are in the same country or not. So your answer is an open-ended answer where you would say that you can categorize them as different segments. You can see most of these questions have come in the RTP or study material. They have never made it to the main exams because they are very open-ended and student will be confused on what to write. You can categorize them as different segments if the risks and returns are materially different, majorly different. This is irrespective of whether they are in the same country or not. Okay, then you have question number 9. Now PK Limited has identified business segment as its primary reporting format. That is fine. It has identified India, US and UK as 3 geographical segments. Okay, so that will be shown as secondary. It sells products in Indian market which constitute 70%, that is more than 10%. So India is a major geography, reportable geography. Company sales 25% is sold in USA. Again, USA seems to be a major geography. It is greater than 10%, and the balance is sold in UK. Balance kitna hua? 5%, which is remaining, which is not reportable. Is PK as a part of its geographical secondary segment reporting required to disclose segment revenue from export sales where such sales are not significant? Answer is no. It is no for UK. For UK you don't need to report because it is less than 10%. But in my opinion for US, yes, you will have to report because it is greater than 10% over here. Okay, so over here you say, therefore, for the purpose of disclosing secondary segment, PK is not required to disclose export sales to UK since the segment does not meet the 10% threshold. Okay, 10, 11, 12, it is done. 13 is just calculating segment result. Segment result is just calculated very simplistically as a total segment revenue minus total segment expenses. That is about it. So if I calculate, this includes inter-segment as well. We will take the numbers as given in the question for inter-segment workings. Question number 13. Calculate segment results of a manufacturing organization. You have to find segment results from the following information. Directly attributed revenue will be a part of your segment revenue. Enterprise revenue, that is allocated on 5:4:2. So this is maybe divided by 11, that is 10,000. So this is 50,000, maybe 40,000 and 20,000. This is how you will allocate. Okay, and revenue from this is revenue from transactions with other segments. Remember, in segment revenue, you will include inter-segment revenue as well. And hence, if I were to total this, I will get my total segment revenue. Achha, then you have operating expenses. And then you have enterprise expenses which are allocated. If the ratio is available, you will take that 77,000 divided by 11. That is 7,000 into 5, 35,000. Then you have, I think, 28,000. And you have 14,000. And there are some expenses on transactions with other segments. So if I look at the total expenses over here, for example, just for understanding, this will be what? 3,35,000 plus, I think, 81. This is 4,16,000 of total expenses, including inter-segment expenses. 178 and 58 of total expenses, 2,36, including inter-segment expenses. And I think 89 and 112, I think 201 of total expenses. Now, a very notable point over here would be, some students might say that the transaction inter-segment is not totally tallying. Ideally it should, but the institute has not told you that there is an error. So what institute has done is, whatever is given, you have solved accordingly. We will also do that. So when I look at total revenue, this is 5,50,000 and so this is 6,60,000 for example. The second case, this is 3,40,000 plus 75, 4,15,000 for example. And last one is 1,50,000 and I think 2,70,000. And hence, if I want to find the total segment result, it is very easy. 660 minus 416, 660 minus 416 comes to 2,44,000. Second wala 415 minus 236, 179. And last 270 minus 201, this is 69. If I total all of this, I think 4,94,000 or something will be my total segment revenue. So all of this, 244, 179, 244, 179 and 69, this is 4,92,000 or 94. Fair enough. So this is just total segment revenue minus total segment expenses. You need to know that total segment revenue includes inter-segment revenue. Total segment expenses include inter-segment expenses as well, and accordingly you will solve. Okay, then you have question number 14. Whether interest expense relating to overdraft or operating liabilities is identified to a particular segment should be included in segment expenses or not? No. Remember, interest is financing in nature. Now, unless you are a bank or an NBFC, interest is financing in nature and hence should not be a part of segment expense. Clearly told, it should not be included as a part of segment expense. Now, if you see over here, the two questions that have come in the exam, at least over here that we are including, this is similar to question number 1, very similar. If you want, you can pause and try this, an exam question. And over here, this is very similar, December 21 question. It is very similar to question number 10 and 11. Again, you can pause and try this. Now, the only thing that is remaining after this is that one question, question number 4, just in case the institute asks you to prepare a detailed segment report. Okay, so over here, you will have to just cull out the data and prepare a segment report based on the available information. So let us try to review question number 4 for preparation of segment report. Prepare a segment report for publication in Diversifiers Limited for the following details of the company's 3 divisions and the head office. ICAI has assumed that the head office over here is unallocable. Remember, it does not generate any separate revenue. It is unallocable. That is what the ICAI has assumed. So the division over here is a forging shop division, where you have sales to bright bar division, that is inter-segment sales. This is inter-segment sales. Other domestic sales, that is external. Export sales are external. Then there is a bright bar division, sales to the fitting division. Again, this is inter-segment sales. Export sales to Rwanda, which is kind of a country in Africa, which is also, I would say, external sales. And then the fitting division, export sales to Maldives. So over here, you have 2 inter-segment sales. This entire data is regarding sales. This 10,800 is nothing but the total. It is written against bright bar, but it is a total over here. This 345 is actually a total over here. Okay. So if I want to prepare, I would say these are my 3 business divisions. And if I look at the expenses, I see pre-tax operating results. This is like a segment result for forging shop, for bright bar and fitting division. So this is given division wise. So divisions business seems to be my primary segment. Head office, cost relocated. Now reallocated. Now this is a little tricky. If I look at this is maybe a total of 144 of total expenses which are linked to head office. Institute has assumed this to be unallocable and it is to be shown separately. Similarly, interest costs, these are financing in nature, and hence this is 16 rupees of interest cost, not really linked to head office, but this is 16 rupees which is linked to interest cost, which will be shown for the purpose of reconciliation if I have to reconcile with net profit. And then you have fixed assets, net current assets, and long-term liabilities. Now this is linked to head office and hence this will also be treated as unallocated. So if I had to kind of make up a segment report over here, this will be on forging, then there will be bright bar, then there would be fitting division, and if required there is an intercompany elimination, because ultimately in my final balance sheet I will not show all of this. I will only show the revenue as is appearing in my P&L. So over here, and there is inter-segment elimination, and that will give you the total. So if I go to see over here inter-segment, in inter-segment I will have 4575 over here, I will have 45 over here, and nothing in the fitting division. And external, whether it is local or export, this is 90 and 6135. 6135 plus 90, sir. One is domestic, one is export. Yes, we'll show that separately in geographic segment. Right now, I will show 6225 total. Then I will have 300, and in the fitting division, export to Maldives is 270. So basically, if I go to see my external revenue 6225, 300, 270, this comes to 6795. Inter segment will not reach my final P&L, so this is 4575 plus 45, and this is 4620, and hence nothing will appear in my final P&L. So if I look at the totals, the total among other things is 6795 over here. Individually, if I told this is 10,800, this is 345, this is 270, and less 4620 will give you this answer. So this is your first part, linked to revenue. Second part is linked to the result. When I look at the result, what will be there in the result? I will start with the profits, 240, 30 and minus 12. So ideally this is 270 minus 12 comes to 258. Okay. Against this, there are certain unallocated head office expenses. Institute has directly shown this as 144. These are my expenses. Interest cost, again Institute has directly shown 16. If you want, in my opinion, you can even show a breakup between these divisions, but this is financing in nature and hence it must not have been deducted while calculating your let us say operating profits. Similarly, head office, it's a little contentious, but Institute has assumed that this is reallocated, which means this must have been taken separately, and hence this will give you the net profit. If there was a tax, I would have taken the tax also separately. This is I think 98 rupees. So if I go to see over here 6795 in total, and then profits of 98, all said and done, 258 minus all of these numbers, and you get your answer. Now you look at segment assets. Now when you look at segment assets, you will total up the fixed assets. So if I look at segment assets, I will first total up my fixed assets for each of these. So if I do this over here, let's say for यहाँ पे लिख सकते हैं, let's say fixed assets, net current assets. So this will be the same. So your total fixed assets comes to, I will not take this over here for the time being. If I look at my total fixed assets, this is 360 and 180 comes to around 540, 180 and I think 60 and 135 comes to 375. But this is my total segment assets, 375 and 540. This is 915. There is some head office assets as well, that is 72 and 75. So this is I think 140, I think 7 or something. So this is 147 which is unallocated, and hence 915 and 147 comes to 1062. This is your total segment assets. In terms of liabilities, your total segment liabilities comes to I think what 210, 225. To that you add 57 of unallocated liabilities. 225 plus 57 comes to around 282. So this is 282. Now there is no data regarding capex, no data regarding depreciation. So if I look at this, I see 915 plus 147. This is unallocable due to head office, and that will come to 1062. Liabilities 225 and 57 comes to 282. Perfect. Now there is no capex, no depreciation. However, secondary segment, now I don't have segment result, geography wise. I don't have capex geography wise. However, I do have the revenue. So when I look at revenue, there is some revenue in India. I only have to look at external revenue in the secondary segment. In India, this is 60. Then there is some sales which are happening in Rwanda. Export in Rwanda around 300. Export in Maldives, if I go to see, this is 270, and then rest of the world or others will be 6135. If I now total this, I will ideally get 6795, which is breakup, as you can see over here, 90, 300, 270, 6135, which is breakup, which is given geography wise. Only for external, if you had data regarding assets or capex, you would have done that as well. Now we have given some reference notes on how to do the reconciliation and what are non-operating items, what are unallocable items, and ICAI, that is taking head office as general admin and hence taken it as unallocable over here. At least if it comes in the exam, we want to follow the ICAI solution. So this kind of takes care of AS 17. I hope this has been clear. We will stop and I'll see you soon with the next standard. Till then, study well, study hard, and take care.